Today is Monday, February 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. And starting with the financials this morning, Alan, tariffs. It's said that nobody wins a trade war. What is your outlook for financial futures markets and the global economy in light of the current administration of the U.S. imposing tariffs on Canada, Mexico, and China?
Okay. Well, so President Trump's tariffs on those countries may slow growth in the global economy. So you're right. It's a difficult win all the way around when there are tariffs. However, I do believe that the U.S. economy will hold up better than economies elsewhere in the world. I think U.S. equity markets will probably also do better than equity markets around the world. Also, a relatively strong U.S. economy, comparatively speaking, will, I think, cause the Federal Reserve to be slow to move to accommodation this year with the next interest rate cut coming in June. However, central banks around the world, especially the European Central Bank and the Bank of England, will be under additional pressure to ease credit conditions more aggressively. So this is likely to sustain the advance in the U.S. dollar. The U.S. dollar was closing in on two-year highs this morning, while the euro currency and the British pound are likely to continue to come under downside pressure. Also, the Canadian dollar will probably continue to weaken. Even today, it traded at its lowest levels since April of 2003. As far as metals, March gold advanced to new record highs despite these sharp gains in the dollar. Most of today's strength in precious metals linked to flight to quality buying. Also, silver, I think, will trend higher, but will not hold up as well as gold. So look for higher prices in silver, but at a slower pace than the gold market. And the copper market, I think, will remain in a trading range with the bearish influence of tariffs likely to be offset by the bullish influence of central banks lowering interest rates. So in the metals markets, gold should continue to be the leader to the upside.
You know, a lot of people concerned with the stock market, due to the tariffs. I mean, we're softer today. What's your take on that?
I think it's the U.S. economy that'll hold up relatively well. And I think corporate earnings will probably continue to come in better than expected. So I think that may sustain the uptrend in stock index futures. Even though the Fed is likely to be slow to cut rates, other central banks around the world will be more, as I said, more aggressively cutting rates. So lower rates elsewhere in the world will be a tailwind to U.S. equity markets and maybe equity markets overall around the world.
Mark Soderberg, I think we stay with the theme here. What areas of the ag sector will be most impacted by this weekend's announced tariffs?
Well, the initial reaction was a bullish impact for soybean oil and oats. In the past 12 months here in the U.S., we've used about 4.5 million metric tons of canola for the production of biofuels, with nearly half of that coming from Canada. So with a 25% higher cost due to the tariffs, it would certainly make bean oil more attractive as a beanstock. And here in the U.S., we import more oats than we produce, and most of those also come from Canada. So prices here are responding with a sharp rally following the 25% announced tariff. The initial reaction in corn was bearish as prices gapped lower overnight. However, Mexico is the largest importer of U.S. corn. So far for the 24-25 marketing year, their commitments do sit at a record high, 637 million bushels. About half of that have been shipped. While Canada has quickly responded that they will act with similar tariffs on U.S. goods, Mexico, on the other hand, they've worked quickly to avoid these tariffs altogether. In a morning call with the Trump administration, just breaking news, they've pledged to reinforce the border with 10,000 National Guard troops. And for now, it appears these potential tariffs have been delayed for a month. While in China, there's the 10% added tariff there. There's even a Wall Street Journal article now that's suggesting that China would consider renegotiating parts of that phase one trade agreement from 5 years ago, where they would pledge to buy $35 to $40 billion of U.S. agricultural goods annually. So that's had a surprisingly bullish impact turnaround now on the soybean prices as well.
And Mark, how about giving us a quick update on how the speculative traders are positioned right now in regard to commitments?
Yeah, both the money managers and index funds, they've been net buyers across the ag space now for 5 consecutive weeks. In total, last week, the money managers, they bought just over 56,000 contracts. They're long position now. I've got it at just over 465,000. That's their largest exposure in the ag space now since February of 23. So working on 2 years there. Money managers, they bought 39,000 contracts of corn. The length there is swelled now to about 351,000 contracts. That would be the biggest since May of 22. They were net buyers across the soybean complex as well. They're long the beans, they're long the oil. Still a little bit of a short position in the meal, however. And there were big sellers last week in the wheat, selling 19,000 contracts. Short position there in Chicago, 111,000. Now that's the biggest short position there in about just over 1 year, 13 months. Index funds also bought 33,000 contracts across the ag space last week. Long position now is the longest it's been since July of 22.
Mark Bowman, let's stick with the theme here. What impact could tariffs have on the energy markets?
Well, we're already seeing the biggest impact on the products. It's certainly reflected in the market action today. These tariffs announced today included 25% duties, right? Canadian oil imports did get a bit of a carve out of a 10% duty. Together, Canada and Mexico account for about 25% of crude oil, all crude oil processed, refined in the U.S. Even though we produce a lot and export a lot, we need this other oil that's heavier to work with our refineries. Canada is a more important factor here. U.S. imports around 4 million barrels per day from Canada, and 70% of that is refined in the Midwest. So this could really affect Midwest gasoline prices directly. There's another 450,000 million barrels per day from Mexico, mostly for refiners around the U.S. Gulf Coast. They have more flexibility because they imported via tanker, whereas the much of the oil arriving from Canada arrives via pipeline. So and so at this point, it would seem that Midwest refiners don't have a lot of money, other options, and Canadian producers don't have easy access to other markets. Of course, Mark mentioned the Mexico already agreeing to something, and therefore the tariffs being postponed another 30 days.
And Mark, how about cotton? Any effect there?
Well, so here's the thing. China and Mexico are both important buyers of U.S. cotton. As of last week, they were the 4th and 5th largest buyers of U.S. cotton in terms of total commitments so far for the 24-25 marketing year. But their purchases are down considerably from previous years. China so far only committing to 693,000 bales versus 3.998 million at this time last year. And their outstanding sales, although they're 221,000 bales, there were 1.862 million a year ago. So even if they were to threaten cancellations or stuff, it's just not that much at stake. Mexico, a little more, their commitment is so far 614,000, so they're very close to China's. They're versus 732,000 a year ago on a 5-year average of 842,000. So they're not down as much as China is, but they're still down from a year ago. And they have about 352,000 bales outstanding versus 371,000 a year ago. Biggest buyers this year have been Pakistan, which is over almost 1.9 million, and Vietnam at almost 1.8 million. And the total U.S. exports this year, though, only 11 million bales versus 14 which is the lowest since 2015 and down from a peak of 16 million in 2021. Brazil has already taken a larger share of global trade this year, last couple of years, and last year it surpassed the U.S. for the first time in 100 years. So cotton's issues go way beyond these tariffs. Cotton prices have already fallen to their lowest level since 2020. So the downside risk at this point may be far less.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.